What really matters is that we haven't had a sell-off in so long that we've forgotten how to handle it. So tonight, let's go over the rules of the road. Yes, road rules for dealing with a sell-off. Well, what do you have to do first? You have to identify the real reasons for the decline, not the headlines. Now, we know that interest rates have gone up. We need to decide whether the move is significant. The answer to this historically is that this kind of move typically doesn't do much damage to the economy, and therefore not much to earnings, which is what we focus on in Mad Money. Sure, there's some weakness. As Paychex told us in the release today, something will plumb with them later on tonight. And I quote, the softening in hiring we started to see in the second quarter continued in the third quarter. There's more choppiness in hiring across customer segments and industry now. End quote. Worrisome? Only if you don't read the next line, which is, quote, our clients tell us they still can't find qualified employees and are not willing to hire just anyone at higher wage rates, especially in areas with minimum wage increases and aggressive legislative changes. End quote. What are we going to do with that? I mean, California mandated a higher minimum wage. Naturally, that's going to cut into hiring. And it is harder to find qualified people. That's okay. Nothing new. Next. Tesla's numbers were weaker than expected. I mean, much weaker. 387,000 vehicles when we expected them to sell more than 457,000. That was their biggest estimate miss in 7 years. And their first year-over-year decline since 2020. Tesla's a headline grabber, though, isn't it? Always will be. But let's unpack this. We know that there's been an awkward pause in electric vehicle buying in our country. China's hurting with real price cutting in the EV market. Berlin's been disrupted by sabotage. To me, this is simply par for the electric course in terms of America. We can blame higher interest rates and weakening economy, but honestly, I think the country's turn on EVs for now. It's like everyone who wants one already has one. Tesla's simply feeling what GM and Ford were feeling, okay? The real problem with Tesla is that it turns out to be a mortal car company and not an immortal tech company. Third issue is PVH, the big apparel company that's behind Calvin Klein and Tommy Hilfiger. That gave us a terrific number, absolutely. But then it jarred us by talking about a slowdown of some significant proportions. A forecast that caused the stock to drop 22% today. Now, when I checked the report, though, it was about weakness in Europe. And we're not going to extrapolate from Europe to the United States, where business remains much stronger. I said in our game plan last Thursday that the apparel stocks were coming in way too hot going into PVH's quarter. Well, that sure turned out to be the case, huh? But I don't have a solid read-through to our country. And then there's the weakness in the health insurers. Wow, Humana off more than 13% today. United Health down over 6%. CVS, which owns Aetna, shredding another 7%. Bad for the consumer? No, hardly. I mean, the Biden administration just decided not to give insurers a bigger rate increase for the Medicare Advantage plans. If the government had sided with the insurers, now that would have meant horrific health care cost inflation. Instead, it's good news for most Americans, even if it's awful for the managed care industry, and it is awful.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.